Although Bitcoin has had a bumpy start to the year, analysts believe it will eventually reach $100,000, and that the question is when, not if. Bitcoin fell below $21,000 on Thursday as investors fled riskier assets in the face of macroeconomic uncertainty. Surging inflation, a wobbly stock market, rising interest rates, and recession fears are all adding to rising economic worry. In recent months, the crypto market has been increasingly linked to the stock market, making it even more dependent on global economic variables. Following the Federal Reserve's decision to raise interest rates by 75 basis points, the greatest rise in 28 years, U.S. markets soared Wednesday afternoon. However, the crypto market failed to rebound, which Edward Moya, a senior market analyst at OANDA, believes is a worrisome indicator for some investors. Bitcoin could be in peril if a major gain on Wall Street fails to thrill crypto speculators, Moya adds. The $20,000 barrier is holding, but no one appears to be interested in getting back into the crypto trade. With no end in sight, experts predict that the conflict, inflation, and shifting monetary policy in the United States will create even more volatility in the coming weeks and months. Over the last 6 months, Bitcoin has only been above $45,000 a few times, and it hasn't been above $50,000 since December 25, 2021. Despite the ups and downs, Bitcoin's current price is still a long way from its all-time high of $68,000 set in November. Despite the current price drop, Bitcoin is still worth more than twice as much as it was just a few years ago. These types of ups and downs are nothing new for Bitcoin. Despite the volatility and recent price drop, many analysts believe Bitcoin will eventually cross the $100,000 milestone. However, there are differing viewpoints on when it will happen. According to a recent poll by Deutsche Bank, approximately a quarter of Bitcoin investors anticipate the price of the cryptocurrency would exceed $110,000 in 5 years. The volatility is nothing new, and it's one of the reasons why experts advise new crypto investors to be cautious when committing a portion of their portfolio to cryptocurrency. Bitcoin has risen in value as steadily as any other cryptocurrency on the market over the years. It's only natural for Bitcoin investors to wonder how high the currency can rise. Unfortunately, the price of Bitcoin is exceedingly difficult to forecast, and it is considerably more vulnerable to market forces than other asset classes. Nonetheless, we decided to poll some experts for their best ideas. Here's what they had to say. Coming off its all-time high in November, a $100,000 Bitcoin price was easy to forecast late last year. With Bitcoin's steep decline since then, the prediction game has become much more difficult. The most ardent crypto doubters anticipate that Bitcoin will crash to $10,000 by 2022, but a middle ground could be that Bitcoin can still reach $100,000, as many experts projected late last year, albeit on a slower schedule. Back in November 2021, Kate Waltman, a New York-based certified public accountant who specialized in crypto, told us, the most educated instructors in the sector are expecting $100,000 Bitcoin in Q1 2022 or sooner. But, as major organizations like Nike and other big brands explore for methods to monetize their products in the digital metaverse, bullish analysts are reevaluating the crypto industry as a whole. The popularity of altcoins is growing because of the emergence of metaverse games, worlds, products, and experiences, which has shifted investor perceptions of Bitcoin, known as the original crypto. Many experts are hesitant to estimate a figure or a date, preferring to focus on the upward trend in Bitcoin's value over time. Last October, Jurrien Timmer, director of global macro at Fidelity Investments, forecasted a very sustainable growth in Bitcoin's long-term value, driven by organic market activity, with the $100,000 milestone in sight. What I expect from Bitcoin is short-term volatility and long-term growth, says Kiana Danial, the creator of Invest Diva and author of cryptocurrency Investing For Dummies. What every investor should know about Bitcoin price forecasts. Financial advisors and other specialists warn against allowing Bitcoin's price volatility to influence your investing decisions. Due to a practice known as dollar cost averaging, studies have shown that investors who contribute frequently to passive index funds and ETFs do better over time. That's why experts advise investing no more than 5% of your whole portfolio in cryptocurrencies, and to never invest at the expense of emergency savings or paying off high-interest debt. People who invest in diversified investments like low-cost index funds, with crypto making up a modest part of their portfolio, are more likely to build long-term wealth and save for retirement. Even with crypto, experts recommend taking a set-it-and-forget-it attitude. Passive investing is a really valid technique to reach financial goals, says Sarah Catherine Gutierrez, a certified financial advisor in Arkansas. Because most people are unfamiliar with cryptocurrency, It's fine to wait and observe how things develop before putting your money on the line. We only have around 10 years of data to base crypto price projections on, and the price of Bitcoin, while potentially rising in the long run, is extremely volatile day to day. Volatility makes determining the what and why of your crypto approach difficult. Before investing in Bitcoin or any other alternative asset, consider what you hope to gain and why you want to participate in such a turbulent market. This will assist you in remaining focused. I don't think people understand how to evaluate Bitcoin across the board, Gutierrez says. You need to know your anticipation of what value you'll obtain from what you're buying while you're buying it. According to Gutierrez, financial planners do not have a bias against Bitcoin, especially if a client indicates an interest in learning more about it. However, you should consider whether crypto is necessary for your strategy. According to Gutierrez, the answer is usually no. Our opinion is that you don't need Bitcoin to achieve your goals, she says, adding that the average individual should prefer straightforward, easy to understand investments. This will help you stay on track with your key financial goals and position you for a healthy retirement in the long run. If you want to learn more about Bitcoin and altcoin, please hit subscribe button and notification bell icon. Thank you.